Hi guys, it's Thomas here from COTBase.com. Welcome to our weekly COT review. Today we're going to be looking at the 7th Commitments of Traders Report of 2020. And as we always do, we shall start the analysis by looking at the largest changes in commercials positions. And here you can see Euro on top of our list with a 23% change in commercials positions. 14% change in large speculators, larger than average, no question about that, coming after a decline in the market. It is, of course, a bullish COT change signal suggesting we may see a bit of a rise coming early next week in Euro. Now, jumping to the 5 years chart, you can see that we are more or less in between the two extremes, getting closer towards bullish extreme levels. But of course, if you look at this 5 years time horizon, we have seen much greater extremes in the past. For instance, this a bullish extreme from December of 2015, a beautiful COT extreme signal. We are not at those levels yet. So this bullish change signal may present a opportunity in the short term, but in the medium to long term, there's nothing against further decline in the euro. Turning over to the Australian dollar, we have a 15% change over there in commercials positions, 23 in large speculators. In this case, we are witnessing a bearish COT change signal suggesting a further weakness in this market over the first part of next week. If we move on to the 5 years chart, you may see that we had a relative bearish extreme in January. It seemed to be effective, or at least we've seen a further decline happening in the Australian dollar. Now, we are not at those all-time or close to all-time bullish extremes, nor are we at any bearish extremes for that matter. In a much wider perspective, you may see that we're still much closer to bullish COT extreme levels, but nothing too specific from the COT report at the moment. So it's mainly the bearish change signal that may be helpful to us. So we might as well just step aside and wait before really looking at anything large. Changes in the trend may happen much easier if there's a significant extreme in the market. That's not the case right now. And again, another currency market, this time the Canadian dollar, where we have a 14% change in commercials positions, much greater change size than average. You may see that on the charts over here. In this case, we're talking about a bullish COT extreme situation. And by the way, of course, we are talking about futures markets here. These are measured in US dollars. But of course, one might ask the question, okay, maybe not against the dollar, but maybe the Canadian dollar seems to be more stronger than the Australian dollar, at least from the change signals perspective. So that might give some opportunities for you. But here we have a dollar, which is a Canadian dollar, which is producing a bullish COT change signal. And if we move on to the 5 years chart, you may see that we are actually moving away from bearish COT extreme levels. We're definitely not at those bullish extremes that we've seen in the past, like the one from January of 2019. We had a fabulous signal from May of 2017. And of course, we can find great examples from even earlier. We are not at those levels. We're more or less in between. Definitely, Canadian dollar seems to be a bit stronger than the Australian dollar. Moving on to large speculators COT Extreme, we've got the rough rice on top of our list with a 451 report extreme in large speculators. Now, if you've been following my reviews in the past couple of weeks, we talked about rough rice and we were talking about this bearish COT extreme signal, and you may see that there has been some decline happening in the market. So this signal seems to be taking its effect on the market. Now, that of course does not mean that it's over. We are very much used to significant changes in a trend, and if this bearish extreme is a trend changer, then we of course can expect much lower prices to come in the next couple of weeks, month, or possibly years ahead of us in the rough rice. Cocoa is our next market with a 311 report extreme. Again, a market that we've talked about. Here you see it being still relatively close to its tops. But the dynamics of this movement in traders' positions, the way commercials increase their net short positions, and the way large speculators added to their net long positions seems to be signaling a opportunity to the downside if you look at the chart. So again, another great opportunity over here. And then last but not least, we should talk about soybean meal, where we have a bullish COT extreme. We have a 205 report extreme in large speculators. But visually, if you look at these charts, it's quite obvious that we are at this bullish extreme territory. Now, caution is advised, because since February of 2019, we have been at these levels, and you can see that the market did not really change its path. So there's still some possibility that this would continue on for the next few months or years, possibly. We've seen examples in the past where things got really rapid after an extreme, as you may see from March of 2016. That's not the case right now. Nevertheless, if you are analyzing stress levels, you can definitely come to the conclusion that there is a bullish extreme situation here in soybean meal. Maybe not the best market to trade. I mean, there's so many markets to analyze. And getting to the end of this review, of course, that's exactly what I wanted to tell you at the end of this video, is that you can come to COT Base and check all the market categories that are available. You can look at new COT report types, other data types for that matter, analyze all sorts of data sets, and do a more in-depth and detailed COT analysis with all the settings that we offer. So a lot of great opportunities here. I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Goodbye.